So, we bombed the Middle East again. Let's see how this is going to affect Fort Worth's real estate market. Now, February was giving us a pretty decent clue of what was to come. Prices went up, sales slowed down, inventory hasn't really moved, but now the global tensions are rising, oil prices are spiking, and a surprising jobs report just came out that just left a very sour taste in every economist's mouth. So today we're going to be diving in and breaking down exactly what happened in the Fort Worth housing market in February, what's happening in the broader economy, and what it means if you're thinking about buying or selling this spring. Hey neighbors, if you don't know who I am, my name is Joshua Sherman. I'm a broker and realtor here with Remax Trinity, and for the past decade, I've helped buyers and sellers all over Fort Worth and the surrounding areas navigate this market using real numbers and professional advice and guidance instead of just relying on the headlines. Now, every month I break down the actual MLS data for Fort Worth, along with some economic trends shaping where the housing market is heading. So let's start with those numbers and talk about what actually happened in February. The median home price in Fort Worth came in at $335,000. Last year in February, it came in at $323,500. That's about a 3.6 increase year over year. And compared to just last month in January, where it was $321,000, despite the higher interest rates, home values in Fort Worth are still rising, albeit at a much slower pace than I would like. It's just steadily appreciating, and honestly, that is exactly what a normal and healthy housing market is supposed to look like. Now let's talk about how many homes actually sold. In February, we had 523 closed sales. Compared that to January, where we had only 369, and in February of last year, where we had around 572 homes that sold. Now that's about an 8.6% drop compared to last year. Now, that doesn't necessarily mean that buyers are disappearing or homes aren't selling at all. What it means is that buyers are moving much more carefully and taking longer to make their decisions, which is pretty typical when mortgage rates are a little bit higher and so many other economic factors are playing into their decision. Speaking of taking longer to make decisions, homes are currently taking about 51 days to sell on average. Now that is a little bit longer than just last year and roughly 11 days longer than in January. Now, historically speaking, 45 to 60 days on a market is actually pretty normal. So the market slowing slightly here is really just a return to something that was closer to normal. Now, homes are selling at about 96% of their list price. And that's almost identical to last year. So sellers are still getting very close to their asking price, but buyers are still negotiating. And that's something we really didn't see much of during the peak frenzy, but is something that is much more common in the last couple of months. Inventory is sitting at about 3.5 months of supply, which is basically unchanged since last year. For context, under 3 months is generally considered a strong seller's market. 4 to 6 months is considered a balanced market, and 6 months or more is typically considered a buyer's market. So Fort Worth is sitting right around the edge of a balance, but still leaning slightly to a seller's market. Keep in mind, though, that Fort Worth is a large area, and there are pockets and micro markets where there are seeing a true seller's market or a true buyer's market. Real estate is hyper-local, so make sure to get the statistics on your own particular neighborhood. But ultimately, and on average, we're pretty balanced and honestly pretty stable. To understand why the housing market here has stayed relatively stable, you have to look beyond real estate and into our local economy. Fort Worth continues to benefit from a strong job growth and population growth. The Dallas-Fort Worth Metroplex remains one of the largest growing regions in the United States. Major employers like Lockheed Martin, BNSF Railway, Bell Textron, Texas Health Resources, and the broader DFW corporate ecosystem continues to bring high-paying jobs into our own backyard. And as long as people keep moving here for work, housing demands tend to follow. And that underlying growth is one of the biggest reasons why our local market hasn't seen the kind of volatility that some other cities have experienced. But speaking of volatility, let's talk about something that can change all of this data and where that's projected to go. To do that, we have to talk about something that might not sound related to housing at all at first, and that is oil. Oil has been getting a lot of attention this week because of escalating tensions in the Middle East. Recent US and Israeli airstrikes on Iran, along with retaliation, have raised concerns about potential disruptions to the global oil supply. One of the biggest concerns right now involves the Strait of Hormuz, a narrow shipping channel where roughly 20% of the world's oil supply moves every single day. When global oil supply looks threatened, oil prices tend to raise, and they tend to raise quickly. And when oil prices rise, inflation concerns usually tend to follow, because higher oil prices means higher costs for things like gasoline, shipping, manufacturing, airlines, trucking. Those costs ripple throughout the entire economy, and that includes the bond market. When inflation expectations rise, the treasury yields often move higher, and mortgage rates tend to follow the bond market. So if oil prices stay elevated, that could put some upward pressure on mortgage rates in the short term. Now, there's another piece of breaking economic news that could influence mortgage rates, thus our local housing market as well. The latest non-farm payroll report just came out, and it surprised a lot of economists. They were expecting about 60,000 jobs to be added to the job market, and instead, the report showed negative 92,000 jobs created. That's not only far below expectations, it's also a sharp drop from January's 130,000 jobs that were added. And at the same time, the national unemployment rate jumped to 4.4%. What this tells us is that the US labor market may be starting to soften. And interestingly enough, that can sometimes be good news for mortgage rates, because when job growth slows, inflation pressure tends to ease. And when inflation eases, the bond market can improve, which can help mortgage rates stabilize or even come down. The important question here is whether that national slowdown is affecting Fort Worth. Right now, Fort Worth still has a pretty strong local economy. Industries like aerospace, defense, logistics, healthcare, and construction continue to support our strong employment here in North Texas. And the Dallas-Fort Worth region has consistently ranked among the top metro areas in the country for job growth and population growth. So while the national labor market may be showing signs of cooling, Fort Worth still has strong economic fundamentals supporting our housing demand. And this is where we have to kind of zoom out for a second, because something happening halfway across the world can actually affect the interest rates on a house right here in Fort Worth. I know that sounds dramatic, but that's actually how global economics works. Now, when oil prices spike, inflation pressure rises. When inflation pressure rises, the bond market reacts. And when the bond market reacts, mortgage rates tend to follow. Now, combine that with the latest job report showing that labor market may be starting to soften, and what you end up with is a bit of a tug of war in the financial markets. On one side, higher oil prices can push inflation higher, which could put upward pressure on the mortgage rates. On the other side, a weaker job growth can ease inflation pressure, which can actually help stabilize or even lower the mortgage rates. And that tug of war is exactly why mortgage rates have been bouncing around lately. Now, before we talk about how that impacts buyers and sellers, there's another important factor working in Fort Worth's favor. The most important thing is that people are still moving here. The Dallas-Fort Worth metro area added over 150,000 new residents last year alone, making it one of the fastest growing metropolitan areas in the entire country. Fort Worth itself continues to rank among the fastest growing large cities in America. And when that many people move into a region, they all need three things: jobs, transportation, and housing. That continued population growth is one of the biggest reasons housing demand in North Texas has remained relatively strong even when the national economy started showing signs of slowing. So, what does all of this actually mean for buyers and sellers that are here in Fort Worth? Let's start with the buyers. Right now, buyers are in a very interesting position. Inventory is still technically low, it isn't exploding, but it also isn't disappearing. Homes are staying on the market long enough for buyers to actually look at multiple options and think about what they're going to do. Negotiations are happening much more, and sellers are much more open to things like repairs and concessions, and sometimes even helping buy down the interest rate, which affordability is still one of the main reasons why buyers are not moving. But buyers today have something that didn't exist much a few years ago: time. Time to compare homes, time to negotiate, and time to make a decision without feeling rushed. But here's the interesting part. If the labor market continues to soften and mortgage rates drop even slightly, that could bring back a lot of buyers into the market pretty quickly. And when that happens, competition tends to increase, which often drives up prices. So buyers right now are in one of those small windows where the market is calmer, but the long-term demand is still there. It's a great time to buy. Now let's talk about our sellers. Sellers are slightly in a different position. Inventory across Fort Worth is still sitting around 3.5 months of supply, which means that we are technically still leaning towards a seller's market, but buyers today are much more selective. Homes that are priced correctly, staged well, and marketed properly are still selling. Homes that are overpriced or poorly presented are the ones that are tending to sit and making those days on market a lot longer. And that's why marketing strategy really matters when it comes to selling your home. Now, the other thing to remember is that spring is historically one of the busiest times of year for real estate. More buyers tend to enter the market, and more homes tend to get listed. Activity tends to increase across the board. So the sellers who usually benefit the most are the ones who are prepared early and hit the market right as the spring demand starts to ramp up. Because timing, presentation, and pricing are what make the difference between a home that sells quickly and one that just lingers on the market. When you step back and look at everything that we talked about today, home prices in Fort Worth are still rising, inventory remains relatively stable, buyers are active but still cautious, and the national economy is showing signs of cooling. Global oil tensions are potentially influencing inflation, and the labor market is sending mixed signals. All of that creates a market that isn't necessarily booming, but isn't yet collapsing. It's a market that you have to adjust to. Markets like this tend to reward people who plan ahead instead of waiting for perfect conditions. Because the truth is, perfect conditions almost never exist. There is always something happening in the economy that's going to affect your home purchase one way or another. There is always something happening in the world that's going to affect your home purchase one way or another. But Fort Worth itself continues to grow. People continue to move here. Jobs continue to be created, at least for now. And those fundamentals are what support housing demand long term. So if you're thinking about buying, or selling, or even investing this year, the best thing that you can do is to understand your numbers early. Know what your home might sell for. Know what your next purchase could realistically look like. And then build a strategy before the spring market fully ramps up. And if you'd like help figuring out what that might look like for you here in Fort Worth, Texas, feel free to text me. If you found this update helpful, make sure to subscribe because I'm going to be breaking down the Fort Worth housing market every single month so you can stay informed about what's happening locally. I'll see you in the next one. Bye, neighbors.